Good morning, traders. This is Michael coming to you from Game Edge on Tuesday, August 12th, with our pre-market prep session here at Game Edge. We'll start with our three pillars: sentiment, structure, and trend. Before we jump into that, I'm going to take a look at our GameEdge.us webpage. Make sure you're looking over this. Click on the free courses here or newsletters. You can sign up for our weekly weekend newsletter. Put your email in here, and we'll get those to you over the weekend. Extensive amount of content and education about our thesis, our tools, and how we trade, as well as SPX option structure. And then check out our free courses, Game Edge Fast Pass. This is our flagship education course that we put extensive amount of time and content in. That basically explains all the tools, our methodology, and how we look at the SPX option structure. And two other free courses down here you might want to take a look at. School of Options free course. Again, nice course about options trading with some exams, basically like a bachelor's, master's type program. And then the mental side of trading is also another free course. And then come join us at our Discord. You can look in here. Again, a large community of traders with multiple abilities and years of experience, from new all the way to extremely experienced traders, former market makers, floor traders, as well as people managing large amounts of money and people just starting out. We want to get you up to speed and profitable as soon as we can here at Game Edge. So let's go ahead and jump right into it. As always, we start with our market trend model. This is the trend based on the tick index. Again, you want to be on the right side of the market, whichever that is. On the buying versus selling, that's basically what the tick index is. We look at this bolded white CT. Again, this is our intraday instantaneous, indicating if there's more buying or selling in the overall market. And the past few days, what you'll notice is the quick takeaway is we've just been oscillating back and forth sideways with the overall tick index. So this is obviously indicating uncertainty within market participants, obviously heading into CPI today, as well as some other news coming up, as well as OPEX. So when we're seeing this oscillating back and forth with not directionality, as you've seen in the past here, from lower left to upper right, staying above our shorter term momentum moving averages, that gives us the opportunity to be long the overall market. But when we're oscillating back and forth here, this is obviously just a cautionary time and a time to protect capital. Obviously, with the gap up this morning, we'll see how this continues to play out. But we had a decent move to the downside yesterday below our shorter term moving averages, so we were risk off for most of the day yesterday, and then heading into this morning. You also notice that the filtered cumulative tick up here, which is our larger institutional plus 1,000, minus 1,000 block orders, has really been sideways. So really the institutions have not been involved except for this selling day back here. New highs versus new lows, breadth indicator still indicating new highs outpacing new lows. So more stocks are being bought than sold. And then our overall tick slightly below zero, just oscillating back and forth. We'll move on to the ARCX. This is how we base our mechanical portfolio, our P-Trans to PGEX portfolio. Make sure you check that out, that we post over the weekend. And we've posted extensively about the back testing and forward testing we're doing with a 70% win rate, 68% win rate, I believe now for the year, but 70-ish% historically back testing over 13 years, as well as 3 years forward testing. And it significantly outpaces the buy and hold on the SPY and SPX. So make sure you check that out. But quick takeaway is with this bolded CT moving into the colored ribbon here, our mechanical portfolio turns off for today, so we don't enter positions. And when we start seeing these multiple touches of the colored ribbon, this is obviously just consolidation sideways, and this is where we are cautious until we get a defined move back to the upside like we previously saw here, and that gives us an opportunity to take advantage of price appreciation. Moving on the SPXA, again, this is our cruise ship. We separate the SPXA and SPXP. Again, the SPX option structure is the largest and most liquid, it's the largest notional value, so that's why we look at the option structure to get an idea of where market participants are positioning and speculating. Call dominated above and below spot price still, so really no change here. Institutions are fully long and looking for upside appreciation as of now. Again, you'll notice 6,400. I think we've talked about that over and over the past week, and you're seeing that pre-market also. 6,500 to the upside is that area of speculation. You'll notice the larger transition area on the SPXA. So again, some uncertainty. You notice key levels to the downside. Make sure you keep those marked on your charts in case we do start testing levels to the downside. But quick takeaway, call dominated. everything looks bullish on the SPXA heading into the overall OPEX. And on that note, after OPEX, we'll see where that money gets positioned because that will tell us where we're most likely the direction in the future. Moving on the SPXP, this is our speedboats, obviously denoted by the contracts over here on our web app. These tiles indicating expiries. These turn over much more rapidly as 0DT as well as weekly. You'll notice the transition area 6345 to 6400. Again, peak X up there at 6450. If we're above the transition, which will denote is a confluence on our 0DT, which we'll talk about here in a few minutes, we're most likely looking for upside appreciation towards 6425, which is COTMC. Historically, that's an area where we could see monetization as out of the money calls become in the money and more balanced. Call holders want to get paid for their risk, so this is an area where we may see monetization. And then above 64.25, we'd anticipate 64.50. And then you see COI up here, which is the highest call open interest of speculation, up towards 6,500, and happens to be a confluence of the JPM short strike also up there. So again, above these levels, we'd anticipate price appreciation to continue as you start capturing more of these out of the money calls. These become more in the money, and then the positive delta is just adding to the overall book and structure, and dealers have to continue to hedge in the overall buying direction as their book. As our book gets longer and their book gets shorter. To the downside, obviously, transition areas will be important. And then if we move down towards the bottom of these transition areas, we'll be looking for supportive type action as we do have in the money calls below us. You'll notice we do see some out of the money put speculation as we've discussed. We've seen puts outpace calls in some of the short dated overall OI changes. Not necessarily anything to be extremely worried about, as within an overall market, a well-hedged market, which includes put speculation to the downside, continues to be supportive as we are call dominated. Notice also the OPEX here, 15% of the GEX will expire, and obviously that money needs to get displaced somewhere, and where that gets displaced in the future will help us with an overall positioning and understanding of where market may be headed. A key takeaway here is this is the SPXP GEX ratio based on the put call ratio, but we add a gamma time component, which is gamma. So again, this is short dated calls versus puts in an overall ratio. Again, looking at the GEX ratio, it is trending to the downside as SPX was pulling back yesterday. So again, short dated call gamma was leaving the overall complex and being overrun by short dated put gamma. But again, we're above that one level. So again, indicating that call speculators are still in overall control. We're just seeing some degradation of the out of the money call speculation, which we'll talk about on our next tool, which is our delta balance. And obviously it's an important tool of understanding where positioning is. So again, above one, call speculators still in control, but we're just noticing a short-term drop in the GEX ratio, indicating call speculation may be waning a little bit, and out of the money put speculation may be coming into the overall complex. So here is our SPX delta balance. Again, we separate these from right-hand plane, left-hand plane that is above spot price in the right-hand plane and below spot price in the left-hand plane. We don't believe any other service does this, so this gives you a fine granularity and a separation of what is happening within these overall structures above and below spot price. And as we say here at Game Edge, moneyness matters, so that is a key component and important to the overall positioning. The right-hand plane is this green dotted line, understanding that it continues to drop. So again, out of the money call speculation is in a negative slope, continuing to drop. So obviously speculation to the upside would have to be increased for price appreciation. That would be out of the money calls being opened mechanically, adding positive delta to our book, negative delta to the dealer market maker book that needs to be hedged. The left-hand plane, which is the red dotted line, continues in a positive slope. So as we discussed, in the money calls below us continue to be dominant, and those continue to be supportive on any pullback. Now we will notice the delta balance is starting to drop in a negative slope also. Again, we're above zero with these two, but we're dropping below zero here. So again, cautionary feather in the cap here. As the delta balance drops, that's just indicating more puts are coming into the complex, overriding the calls. Again, this can be a short-term phenomenon as a sine wave we've talked about. You get out of the money call speculation, price appreciation, you get monetization of those overall calls, and then a pullback within the overall price. Again, you hit a bottom area, which is that out of the money put speculation, and then you start driving back to the upside when the out of the money calls come in. So that's our normal sine wave within the market. Now, if that starts to get disrupted to the downside with the out of the money call speculation waning, and then we see the in the money call speculations start to degrade, then this delta balance will continue to drop below zero, indicating we may be a little bit more cautionary and for a pullback. So as of now, nothing really out of the ordinary. Just keep this in the back of your mind as we price is gapping up towards that 64.25 level that we'll continue to watch for today. And then again, intraday volume metrics will be important, and we'll talk about that here in a few minutes. And then on out in time projected on our delta balance. This is the projection of the delta balance as well as the right-hand plane. So you see this recover on out in time, again, increasing the out of the money call speculation. You do see the in the money calls start to drop below or towards zero on the 18th, again, next week. After OPEX. So again, this positioning after OPEX will be important for the SPX structure, and if we're going to see more price appreciation or a pullback in consolidation. Moving on the SPX P0 DTE, we posted this morning on X. Make sure you like and subscribe that and follow. You'll be notified when we post more content. We are put dominated, but the key here is that net GEX is only negative 1,000. So we're at that teeter-totter point where this could easily go call dominated and most likely will be on a gap up if it's maintained. Again, we've talked about that 64.25 this morning, COTMC. So overnight risk takers and holders of out of the money calls most likely will be in the money or close to in the money at this level when we open, if we're at 64.25, depending on what their delta is. So again, this may be a monetization area at the open. We'll continue to watch that. A pullback down to the top of the drunken sailor range as well as transition would not be out of the realm of possibilities. And this would be a supportive bullish look if we drop down towards 6,400 and then start moving back to the upside. And you'll notice 64.50 is that largest gradient there to the upside of call speculation that we'll be watching. Within the overall transition, you see it's a very wide transition and drunken sailor range today. You see these very low net OIs. This is very low exposure, so this gives the opportunity to be driven by the market wins, which are intraday volume metrics. Mechanics of market participants opening and closing contracts intraday will be driving the price action when you're within this overall drunken sailor range, which is what we kind of saw yesterday. And then once we drop below transition towards the end of the day, we saw that weakness come in. So again, we like to trade within the overall confidence areas. Confidence would be above 6,400. Obviously below this transition area. Again, not anticipating we drop down below that or significantly unless we see a large change in sentiment and structure. But within the overall drunken sailor range, as well as the transition areas, this can be very choppy today. So we'll continue to watch that. Again, this is how intraday volume metrics helps us. If our call and put centroids on our volume command are to the upside, then most likely we'll see an upward drift in overall price. If they're to the downside, then most likely we'll see a downward drift as speculators are looking for a downside opening out of the money puts speculation towards the bottom of the drunken sailor range. So our intraday volumetric tools are key to understanding which direction the market winds may be blowing within this overall choppy transition area and drunken sailor range. And then moving on to the SPXP net stack command. Again, high sensitivity levels for today. You'll notice at the time that we ran this with our overall price, we'll update this maybe here in a few minutes, but we were locked horns. What we call locked horns is in the money calls below us. Those are supportive. In the money puts above us, those are resistive or supply. So 6,400 was that area. If we move above that area, again, we'll start pushing these in the money puts out of the money. Again, that delta will need to be hedged, or market participants will need to decide what to do with those contracts. And then we start capturing more positive delta to the upside for those out of the money calls. Again, charm, we'll update this at the open, but 6,400 were those out of the money calls. Again, above that area, those will become in the money. And then these out of the money puts are down at 6,350. So staying above 6,400 will be key, utmost importance for the bulls for possible upside appreciation. And again, moving towards that COTMC level at 64.25 and then see some monetization and pull back to 6,400 would not be out of the realm of possibilities and would be a nice pullback to possibly get involved for an upside move if the overall volume and intraday volume metrics are indicating, as well as the market trend model are indicating that call speculators as well as buyers are in control of the overall market. All right, let's move on to our trading view plan here. Let's check out where we're at this morning, or where we're at right now. So we're right at 6,400. So a key level, we pushed into that overhead area at 64.19, 64.20 that we just discussed, which is COTMC. Again, these levels become important and increasingly important as we move pre-market as well as intraday. knowing where the moneyness is at and where the possibility of monetization of market participants is at also gives us a great idea of where we can place our overall option structure trades, whether that be verticals or diagonals or butterflies or flies, however you want to overall structure those trades. So pull back to 6,400. That's kind of what we talked about already. 63.95 here is a P-trans level. We're looking at that. Let's go ahead and go to my SPX chart where I've overlaid all of our drunken sailor range as well as key levels. So I was talking about this ledge overhead. This was a net OI ledge that we're going to need to overcome with a large amount of intraday volumetrics. This would be opening and closing of contracts of calls as well as the COTMC area. And we've already touched that this morning. I was 64.19. Really up to the 64.25 level that I was going to expand this a little bit, but we've already touched that pre-market and rejected back off of it. And then now we're pulling back down into the drunken sailor, top of the drunken sailor range. So again, key level 6,400 will be 6,400 to 6,405 will be key this morning to hold above for an opportunity for price appreciation. Again, if we drop back down into this overall transition drunken sailor range, will be driven by the intraday volumetrics, as you'll notice. Low OI exposure here. You see these are like less 100, 200 net OI, less than 100 here. So again, these would be key areas that we watch for price to interact through these levels because it's very easy to drop through these levels as these are low exposure for market makers and dealers. So that will be our price or that would be our plan for today. So quick pullback to 6,400 will be important. If we're below 6,400, we might be a little bit more cautionary within the overall transition and drunken sailor range. We'll have to look at our vol-am intraday metrics as well as our net stat command once it upstates for our highest sensitivity areas. Above 6,400, we'd be watching 64.20.25, and then we have a large gamma glob up here at 64.30 to 35. And then above that, we'd be pushing 64.50. So hopefully that helps everybody this morning. Let me know if there's single stocks you want to go over. I can pull up our web app really quickly. Check out all of our posts from yesterday as well as our pre-market post. You'll see already that we're touching 640 on SPY. Again, that's PGEX. Historically, that's an area where we see some monetization and profit taking. Again, these key levels just continue to work over and over that we post on single stocks as well as the indexes. And understanding where market participants are positioning, understanding the mechanics of it, of dealer and market maker hedging, as well as why moneyness matters, and when a lot of these out of the money contracts become in the money, and where you'll see this possible monetization and adjustment is really key to overlaying your existing trading plan, whether you use TA, whether you use some other form of trading. We like to overlap our gamma edge thesis and mechanical trading with your existing trading plan and really draw both of those together and really give you an advantage and an edge in the overall market. Understanding where the option structure is at, where the key levels and key strikes are, and how price interacts with those levels or moves through those levels really can advance your trading. So just come join us, 7-day free trial, all the tools turned on. If we don't do you justice within those 7 days and you don't learn something, we ask everybody to give us a fair shake because we do have extensive amount of education. But let us know how we missed the mark too, so we can improve. We started Gamma Edge, going on 2 to 3 years now, and we've steadily improved our education as well as the understanding for our members. We can continue to evolve our tools to help the content be easier to digest, easier to understand, and that you can incorporate quickly into your overall trading plan. And we continue to evolve for our members. Our Discord is a member-driven environment. We, as a GE team, are in the trenches trading, but our members give us feedback, and we evolve our tools to help our members digest and understand. And however we can do that is what we want to do here at Gamma Edge. So again, thank you for joining us this morning. Let us know if you need anything. Like and subscribe on YouTube, as well as follow us on X. And I'll hang around for a couple minutes if anybody wants to go over single stocks. But again, we're already interacting this morning with those key areas overhead at 64.25 and 64.25 and 6400 this morning. That we're discussing pre-market there. So those will be key areas to watch into the open. So, all right, thanks everybody. Thanks for joining us. Make it a great day. We'll see you later.